Hello everybody, welcome back to a second part of my big quarterly presentation, and in this presentation I will also talk about equities much more than I did in the previous one. But before we get to the equities, we have a few more slides devoted to crypto. Predominantly, the whole presentation is predominantly crypto oriented still, but I feel I'm touching equities more and more in them. So let's start with open interest, okay? This slide is about open interest. So there is couple of, again, very rich slide, and there is couple of different charts on it. Let me start with my favorite one that I have had. I've actually had very good results with looking at this, okay? So what does this say? This is exactly what it says right here. Open interest / market cap ratio. It's for Bitcoin only, but Bitcoin is still majority of the open interest in crypto, okay? I do not have, actually I have it here. It's right here. It tells you exactly right here, dominance by open interest. 39% of all open interest is Bitcoin. Actually, Ethereum, now, actually, when I'm looking at this, Ethereum is catching up with 30%, and then everything else combined is 31%. But still, Bitcoin is still the leader. The open interest on Bitcoin is still the leader. So, my favorite chart basically divides the open interest on Bitcoin by its market cap, and you get a ratio, okay? And the ratio, when it gets high, I would say over 1.7. Whenever it gets over 1.7, we are coming to the danger lands, I would say, okay? Like, we did go there at the end of December 2024. And that was basically really, now when you look back, that was a very good time to sell Bitcoin and other cryptocurrencies. That was a very good time to sell. It also got there briefly at the very end of May, and we did have some correction. Actually, we had some correction in June, but lately it's been there much more than before during the late July, and also for the most part in August as well. Basically, during these prices, Bitcoin has actually, Bitcoin really has high ratio of the open interest versus its market cap. And this is a big red flag, guys. Okay, I would really draw you, if it hadn't disappeared, I would really draw you a red flag like this. That's a red flag. The system thinks I'm deleting, but I'm trying to, okay. So that's the red flag, okay? Also, when you look at the totally the open interest, this is not a ratio. This is the exact open interest here, and I think this is all coins. Okay, this is all coins. So now I'm also showing you Ethereum, not just Bitcoin. So as you can see that we are actually, even today, we are higher than we were in December, actually, but not in January. Well, actually, we are actually higher than we were in January, because with January we were here, and right now we're actually much higher. And that is probably the increase in the Ethereum open interest, because Ethereum really had a season, and I can imagine that lots of people opened leveraged long positions on Ethereum. This is Bitcoin liquidation heat map. This is as well, again, something I really like to use. I believe in the past, I did analyze, I think I did on Twitter, on X, I think I did analyze, like, this is a lot of open interest there, and we will probably take it, and then we did take it, and then we bounced back from it. I think I did do this analysis. I can't believe that I failed to buy in June, but anyway. So the situation today with the stop losses, where the liquidity is, this is a heat map. I believe most of you are familiar with this. So what this shows you is where the liquidity currently is. This is for Bitcoin again, but again, it makes sense. Bitcoin is still the biggest. So this shows you where the most liquidity is. So the most liquidity is basically in the, and I actually say it here in my stick note, 104 to 112,000 area. Okay, so the moment where we go below 112,000 area, below 112,000, I would not be surprised. I would not be surprised once we start taking this stop losses, this liquidity basically. Once we start taking it, I would not be surprised if we don't go in a 1-2 weeks time all the way to the bottom of it, okay? And the bottom is actually lower than people expect, because people are right now, they're saying that, well, we're bouncing now, or we're bouncing from 111,000 or so, but I have not heard anybody say the figure 103,000 or 104,000. I have not heard anyone say that figure, and I think that figure could actually be very realistic and could happen actually very soon, looking at this liquidation heat map. So overall, my takeaway, open interest, there are red flags. Okay, there are red flags. Another slide. Now let's talk fundamental. Okay, my presentation for the most part is technicals, and I really get it that I might be really missing on the fundamental, more of the just FA, and I've always aspired to be the combination of the TA and FA. So why am I just so much of TA, right? It doesn't make sense. So let me catch up and let me talk about the FA and let me talk about the catalysts in crypto. This is just in crypto. So I have done through my AI assistant, I have done a research right here and right there. I have done a research about treasuries. And my inquiry was like where the trend likely will be. Like, is the trend for the Bitcoin treasuries really going down and the trend for the altcoin treasuries going up? Or is it just my hallucination, or do I have wrong opinion? And my AI analyst actually, my AI assistant actually confirmed shift in corporate crypto strategy. Bitcoin holdings by established companies have grown steadily, but new entrants favor altcoins and yield-bearing strategies. Altcoin treasury companies have skyrocketed in number and capital rise, reflecting broader interest in Ethereum and smart chain assets. So this is a confirmation that the new catalyst for altcoins, which is treasuries, and you have a comprehensive table right here, okay? This is a new trend which is not going away just like this. It's not going to end immediately. And the Bitcoin treasuries are less popular, and I think will be even less popular. Will continue to be less popular than the altcoins. So, and altcoin space is vast. All right. Right now we are just about Ethereum, Solana, Ethereum, Hyperliquid, and Plant. This is not even yet a reality, but we have a first really retarded altcoin treasuries for Doge. Okay. I am aware that I've just said first, because that's exactly what I think. That's exactly what I expect to happen. I expect the altcoin treasuries to trickle down into smaller, riskier, and just more retarded projects, like meme coins, of course. And I expect this trend to continue. However, there is still one more hope for Bitcoin stealing the spotlight at some time in the near future, I guess, we had this from Besant. US government is exploring ways to acquire more Bitcoin to expand the reserve. I have no idea what it could be. I have no idea. It's anybody's guess today. What would be the size of the US government buying? What would be the way of them buying? Like, MicroStrategy is buying Bitcoin for billions of dollars at the present time. Okay? So, and that doesn't, we don't have 150,000 Bitcoin obviously today. Okay? We are today, at the time of recording this, 113,000 Bitcoin. So, I personally do not expect the US government to come with 100 billion and say, we're gonna acquire for 100 billion. I don't expect that at all. I think it could be somewhere like the MicroStrategy is doing, but it's anybody's guess. But this thing, it can still steal a spotlight from altcoins in the near future, because I think that this is what I see as the last, maybe the last spotlight show for Bitcoin, when the US government will start acquiring more Bitcoin to expand the reserves. Let's progress to another slide. So let's talk about barometers, guys. So the barometers, what is it? What is the barometer? Not all of you might actually be familiar. So it's based on a theory that says that as January goes for the markets, so the whole year fares. Okay? And here I'm giving you Bitcoin barometer and S&P 500 barometer. This is for the S&P 500 and this is for Bitcoin. Okay? This is supposed to be arrow. So, when you look at this S&P 500 barometer, and that's also the main motivation why I'm bringing you this, I have taken this sample a few days ago. Today we are lower for the S&P 500. But when you look at here, you see that S&P 500 and its barometer have been unbelievably, but really unbelievably correct. Okay? Just look, like it was saying that we're gonna go down here at the end of Q1. We had strong correction. Then it was saying a V shape in Q2 and Q3. And then basically it's saying a shock correction at the start of Q4, and basically then Q4 the recovery, or start of the recovery at the very least. So this is unbelievable accuracy. For Bitcoin we are slightly less accurate, but we still are somewhat reasonably accurate. Again, the barometer was saying that something bearish will be happening around April, and especially around May. In May it was wrong. May was very bullish for Bitcoin and for all crypto. And then basically the barometer says that the top occurs in mid-April, and that's exactly also where we had 124,000, which was one of my motivations to sell my Bitcoin position publicly, by the way. I think you've seen that on my channels, my social networks. So what is the takeaway from this slide? The S&P 500 barometer has proven to be remarkably accurate so far, and now points to significant correction. Maybe I should not say significant. Okay, but correction, this is about 10%, but probably less. So 5 to 10%, so maybe not significant. I would not write this again, this word, but to a correction expected around the end of September, likely beginning with the upcoming Fed meeting. Meanwhile, the Bitcoin barometer is even more bearish, signaling that the yearly peak may already be behind us, with a period of sideways trading ahead, followed by potential sell-off towards the end of October. The sell-off is this one, actually. Okay. that's basically the takeaway from these barometers. Again, they're highly accurate. Let's see if it keeps going on, but I don't think it can be so accurate, actually. I don't think it can continue, like just my own thinking, because if there is a high probability, for roughly 10%, maybe not even 7%, 7, 8% S&P 500 correction in the second half of September, I guarantee you that the market is not going to wait that long, and I guarantee you that the market will front run that, and it's gonna happen sooner. So, but wait for the conclusion, okay? I'm gonna talk about it when I will be making my conclusion on the last slide. Let's progress to the slide 11. We have a few more. Now let's talk about the equities, because let's talk about rate cuts. Okay, we have a FOMC meeting mid-September, less than a month away. The big question: will Fed cut interest rates? That's a big question. And this is the survey that was done today. I just took a sample of this survey because I really think it's very accurate, because there is no consensus. Even fund managers really differ. I've heard fund managers saying no rate cuts this September. We won't cut. I've heard others say cutting for sure. And I've seen some betting, like Polymarket, a really high chance of rate cuts. So also when you look at the viral tweets, like a Stock Cats, he's bearish about the rate cuts basically. Capital flows is also bearish. 239,000 views on this post, and he's bearish. But there is also some bulls basically. Symbiote is saying that Fed will cut rates 3 times in a row, 2025. Crypto Rover, of course, is bullish, but he's a broken clock. That's one of the broken clock guys, okay? So I should not even have put him there. I'm sorry, that's not good data source at all of the sentiment. You always know that it's gonna be just bullish. Also, a rate cuts rally is at the all-time high, the search term, but that search term is not very popular. This is not that many searches overall. So maybe this is not also the most reliable data set, okay? And here, this is S&P 500 chart over the past 10 years. And there I've just noticed that when we started cutting rates, the first time when we started was basically 2019. And then the S&P 500 basically first corrected a bit, but then had a rally. They would actually coincide with the second half of September being bearish, and then basically recovering the next year. But the last year, what happened? The last year happened was that immediately after the rate cuts, actually, we had a rally. Immediately, this was a really Fed rate cuts rally what we had the last year, okay? But I'm also noticing, and I'm also writing it here in my handwritten, in my sticky notes, that just before the rate cuts, okay, we had a correction. Do you remember the Nikkei? The Nikkei crashed last year. It was lots of fun. We had that correction just before. So again, we did not have that correction just before in 2019. We had some correction actually a few months before. Maybe like this was like a May correction. I'm not even sure what correction was it, but so again, my takeaway is that unless there is a correction that happens right now, okay, right now, this week, next week, and the week after, unless there is a correction that happens during these weeks, I think that we are not going to have a rate cut rally. Okay? Another slide, 2 more, and then conclusion. S&P, so really quickly, let's go really quickly. So S&P 500 technicals, yes, this is a very quick slide. I just wanted to have a look at Excuse me, sorry for this. I just wanted to have a look at how does RSI, MACD, and Willy, how does it look like when you look at the S&P 500 daily and S&P 500 weekly. So, and I've noticed that weekly looks fine, and weekly looks actually really good, like RSI is going up. Weekly, I think there is no really significant danger of a strong correction right now, but a danger of a small correction, 5 to 10%, again, 7% on average, maybe 7%. That danger, I think it's imminent because there is a divergence. Okay, we have made higher high. Do you see higher high in price? And do you see the lower high in RSI? The momentum is depleting, and the MACD is on a decline for some time. The histogram, and also the moving averages. Yeah. Anyway, so I would say that there is imminent danger for a small correction. Okay, or for a correction, I would say. The one more slide. 2026. Let's talk about 2026. Is it going to be a bullish year or a bearish year? I know it's too early. Okay, but I've decided to do some research about it anyway because I'm just curious. And it's in a broad connection to my 4-year cycle, also my 4-year cycle opinion, and me watching the sentiment about the 4-year cycles and thinking to myself, where will be the twist about the 4-year cycle theory? There will be a twist somewhere. Where will it be? So I have done this research right here. I have taken, I have written down ever since 1950, I have written down every single year where we had a correction of 20% or more. Okay, and then I analyzed the next year. I took the next year and I analyzed what was the year after that. Well, this was a pretty funny shape that it made. What was the after that, the monthly performance for the S&P 500? I averaged it, then I averaged it up, and I calculated average and the mean. Then I put it into a simulation. I started the next year potentially around 6,300, okay, S&P 500. And the result of my research is that the next year actually could be steady up. Steady up. And in case we start at 6,285, then the end of the year should be around 7,000. Steady, slow rise the whole year. Another thing is this cycle. This is now I lost it. Just I'm not recalling how exactly is this banner. Is it banner? I think it's banner, right? So this is the banner chart. This is very famous, very old. And look, 2026 is there. 2026 is as a B year. You see? And B year are years of good times, high prices, and time to sell stocks and values of all kinds. And when you look at the previous B years, okay, you have a look at 2016, you have a look in 2007, you have a look in 1999. Like, this was the year just before a big crash, but the year itself was actually very steady, very good. Whole year. 2007 was a year just before a big crash, but the whole year was steady and really good. 2016 was not a year before a big crash, okay? But 2016 was again a whole steady and good year. So this tells me that again, from this perspective, 2026 could be whole steady and a good year. But one more thing, I've seen also other people looking at this, okay? And like if it happened in the past that the following year after this year we had a big crash, like kind of a secular bear market crash in the stocks. Also keep in mind that there can be front running. Okay, there can be some kind of front running of because from this perspective you could say that 2027 2027 year could be the year where we crash hard. Okay, but if they want to, if the market would want to front run that, what would have happened? Maybe it would have happened in the second half of 2026. Okay, just saying. So there is a solid evidence pointing to 2026 being a fully bullish year. At the same time, the 4-year cycle theory suggests bearish outlook for 2026. The most likely outcome is a combination of both. Okay, I'm talking about combination of these, with a year starting of perhaps bullish but turning bearish towards the end. So that's one possibility that I'm now thinking about. What you've all been waiting for, my conclusion. And I'm summing up all my slides. This was 13 exhausting slides, very detailed in some cases. I spent lots of time on them. And now I'm taking it all together and drawing out a conclusion. And based on that, I have decided to come up with 2 scenarios. Okay, scenario A and scenario B. And also then let's have a look where these scenarios intersect. So A plus B, where do they intersect? Scenario A, the S&P 500 corrects 5 to 10% by mid-September, meaning it's already started today and continues to the mid-September, then rallies after the FOMC meeting. Total crypto index should correct down 20% by mid-September. From there, both the S&P 500 and Bitcoin and total crypto likely to push to new all-time highs. In this case, crypto will likely peak near the end of October before entering consolidation phase. Scenario B. S&P 500 continues setting new highs into the middle of September, with crypto also staying strong by the mid-September. Okay. Then in the second half of September, basically from the FOMC meeting, a correction of up to 10% for the S&P 500 begins. Under this path, crypto would already, meaning today, be near the start of its consolidation and sentiment reset. And during that consolidation and sentiment reset, again, we're talking about very roughly, we're talking about 20 to 30% correction for the total in crypto over several months' time. Okay, the bottom would likely form around November, aligning with where much of the 4-year cycle community expects the top. So this is basically me taking a shot at basically counter trading the 4-year cycle theory. And now, where do these two scenarios intersect? In both scenarios, I see as likely 5 to 10% S&P 500 correction soon, within the next 2 months at the very latest, to be completed by the next 2 months. Could be in 2 weeks completed. Having cash ready for this correction will be crucial, because that correction, in my opinion, this is a pullback. This is a good buy the dip opportunity, and it will present an excellent opportunity to position before the continuation of the rally. Total crypto index should have sentiment reset of about 20%, which has either already started or will start mid-September 2025. And with that, and with my conclusion, thank you very much for spending your time on this presentation. I believe it's going to help you in your investment endeavor, and make sure you let me know in the comments what you think about it.